So you've been told that you can skip 2 payments when you refinance. Sounds pretty amazing, right? Yeah, well, that's complete bullshit. Yet somehow lenders say it all the time. In this video, I'm gonna show you exactly why they do that and also explain how it really works. Let's dive in.
Say word, you ain't never told no lie. You ain't never told no lie. Real, say word. You ain't never told no lie. You ain't never told no lie. Real, say true.
Hey, I'm Aaron with New Way Mortgage, and I've been doing this for over 20 years, and this is one of the most common and most misleading marketing tactics that lenders use. So here's how it usually gets pitched. You get an advertisement for a refinance, and one of the benefits of refinancing is that you get to skip 2 payments. Or you're in the process of refinancing and the lender tells you, hey Bob, great news, you get to skip 2 payments. Now most people hear that and they think, hey, that's awesome, I'm gonna save a ton of money by skipping 2 payments. But here's the reality, you didn't skip anything, you're not saving anything. So then why do they say that or advertise it when it's complete garbage? Well, in my opinion, it's one of 2 things. Either the lender that you're working with is just a complete dumbass and doesn't understand what they're actually saying, or they're purposely being misleading to add benefit to sell you on refinancing.
Hang on there, slick.
There's no other reasons. Now, before I break down how the skip payment actually works, do me a huge favor. If you like no BS mortgage advice, destroy that like button, subscribe to the channel. All right, so let's walk through what is actually happening here. When you refinance your current mortgage, it's being paid off. But here's the key. Mortgages are paid in arrears. So the mortgage payment that you make on, say, June 1st, that's actually paying for the interest that was due for the month of May. So if you close your refinance in June and the lender says, hey, you don't have to make your June payment, well, the payoff for your current loan, it's going to include all of May's interest. You're not skipping it, you're not saving it, you're not getting away from paying it. It's gonna be added into the payoff. And let's say that your refinance closes on June 15th. Well, that payoff is also going to include the interest that was due from June 1st to June 14th. So you're not skipping that either. You're not saving it, you are paying for it. It just may not be out of pocket. And then part of your closing costs on your new loan is the prepaid interest. So you're gonna pay interest if your loan is closing on June 15th, you're gonna pay interest from June 15th to June 30th. And then the first mortgage payment on your new loan wouldn't be due until August 1st. So yeah, you're skipping July. But again, that's complete bullshit. You didn't skip anything. You paid the interest for the month of June as part of your payoff and the prepaid interest. So you didn't skip anything, you just prepaid the interest. Your new loan, if it's a 30-year loan, it's still gonna have 360 payments, not 358, which would be skipping payments. And that's why your first payment isn't due until August 1st, because in August, you're gonna pay July's interest, and your refinance covered the June interest. But this is where lenders like to get slick. They sell it like, hey, skip 2 payments, free up some cash. But in reality, you already paid it or it's rolled into your new loan. Now don't get me wrong, refinancing can still make a ton of sense. Get a lower rate, lower payment, maybe you consolidate debt. Those are all great reasons. But skipping payments, that's not a benefit, that's just how mortgages work. Because again, they're paid in arrears. Yet lenders constantly sell the skipped payment as one of the benefits of doing the loan. The way I like to explain the skip payments to clients is not that you're skipping it, it's that it's deferred and your out-of-pocket expense is really what's changing, and that does create cash flow. But there's no skipped payments. So if you actually want to create real savings when refinancing, focus on this instead. What's the break even? How much are your monthly savings? And realistically, how long are you gonna have that loan for? You should check out this other video I did that breaks this down in more detail. So if you're thinking about refinancing and you want to work with somebody that's gonna give it to you straight, no games, no gimmicks, you can book a call with me at meetnewway.com or just click the application link in the description below. And I'll show you what actually makes sense and what doesn't, and we'll just skip the skip payments conversation. And the next time a lender tells you that you're skipping 2 payments, just remember, you're not skipping anything. And if you like no BS mortgage advice, make sure to subscribe, and I'll see you on the next video.